All right. Okay, so welcome to the webinar. I'm going to go ahead and turn it over to Deanne for our Movement Mortgage Minute, and then we'll get started.
Okay, first of all, I just want to say hello, and I saw that you had your 2022 awards banquet, and it looked like there's a lot of wonderful winners, and so first of all, congratulations, and I wish you well all the way into 2023. Interest rates, not much change, not many big predictors out this week other than we're staying with conventional interest rates about 6 to 6.25, jumbos 5.75 to 6, and FHA 5.75 to 6. So not much is changing. There seem to be ticking up just a little bit every day, so it could have an impact, but nothing for you to worry about at this point. And then my last comment, I mentioned it to a few of you last week, but think about this. For every $700 car payment that your buyers have, it impacts their purchasing price by about $117,000. So as you're in the car and showing people properties, and they even allude to purchasing a new car, you definitely want to have them go in and get pre-approved first before they do that. So thank you. Rochelle, take it away.
All right, Deanne, thanks for the update. She's working away. I gave her one of my friends, and she's got a meeting consult scheduled tonight after the call. So I know Deanne's working after hours for all of you as well. Weekends, not a problem, Deanne. I know they rescheduled on you. So it's nice to have a lender that's available to take those calls and take those applications. So appreciate your support with all that we do here at Best Choice Realty. Tonight, we're going to be talking about the optional clauses, the addenda that maybe you don't know we have. We're going to kind of go in from the point of negotiation of the contract and what are some of the additional things you may want to consider, especially with some creative situations that you might encounter. So we're going to go over first, where do you get those extra things? And again, we are all over the state of Washington. It looks like we have even a few people from Idaho on the call. So welcome to those of you that are from all over the state. But they are found in our member resources in the downloads. We do post and we keep those updated. Anytime we refresh with our attorneys, we do modify them here on our member resources tab. Go to members and downloads. And then it's usually in the BCR form section. Anything that we've updated is updated here, as well as in Transaction Desk, if you're using Transaction Desk, so that you can modify that. Now, Idaho's the only one that does not have access to Transaction Desk, but we have spent the time and updated the forms and processes over there as well. So wherever you work, you're going to find the updated things. If you go back to Transaction Desk, I'm really going to talk about this property in Redmond. It just came on the market 2 days ago, and as I guess this is a good thing. I said that, and I know Candace was busy all weekend as well. It was a very busy weekend, and it was very good to see. We had all types of buyer segments out there looking. We had new construction. We had I talked to one of the new construction sites, the manager for Richmond American just yesterday, and she said they sold 8 houses over the weekend. I mean, this is all very positive things that I don't think the other, all of the analysts, they were looking at not having some success until like late spring, maybe even into summer. I'm feeling, at least in the Washington area, and again, I'm going to Idaho next week, but at least from the Washington side of things, it's looking like we're going to recover a bit faster. And thank goodness, Deanne, we've had some good news on the mortgage front and on the interest rates, because I think that's driving this quite a bit. Also, lack of inventory. So even in this price point of 3.45, this property here in Redmond, they are positioning themselves, pricing it right, lack of inventory, even in that price point where they may receive multiple offers. So we are seeing that all over the world. People are looking at their portfolio, their investments, much more different than they have in the past because of what is going on in the world. So you never know, they might get multiple offers. So we're going to go right into Transaction Desk. Shannon knows I've got to keep it moving, so I appreciate her little quick moves here. If we go into, now forms is going to automatically pull in the forms, but a lot of you don't realize we actually pull the important BCR addenda in the documents. So you can see it's in documents right here. There's always two places in technology to get something. So we have it here. And if you go to the right side, there are documents there, and there's documents in the member resources. So I'm going to have her go to the first one. Now, the listing agent, if you're using Northwest MLS, they're going to automatically pull that stuff over that are supplementary. The first thing I'm going to have her pull up is what they pulled over, the offer instructions. So if you're a listing agent, you're like, you got to prep for multiple offers. We actually can support you and help you. Our marketing department is prepared to help you with this. If you want to develop your own offer suggestions, it's in a Word document. And if you want it even prettier, maybe with your logo, we can certainly work with you to clean that up as you start to take listings and prepare for multiple offers, because we are seeing multiple offers. You may want to do just like Windermere has done on this one and put that into a Word document, or put it into a supplement so that you can have the buyer's agents, try to follow along here on certain key points, such as the property address, the title and escrow company, any type of supplement, or what to include, what not to include, what would the seller appreciate, and any final notes. So this is kind of an offer suggestion sheet that a lot of our listing agents asked for when we were getting multiple offers, and we delivered that very quickly. So let's go back to theirs. If you scroll all the way down, Shannon, you'll notice on theirs, they have a contingency preference. What we're going to talk about tonight is they have, in Windermere, they have their WRE 41. We also have a BCR addendum that has some provisions that our attorney has drafted to include potentially if you were looking to negotiate in a certain way. So I'm going to go over that tonight, but I wanted to show you that they also have something similar over there at another firm. Some of the other key things when you're building an offer, say you're going to be in a multiple offer situation, you may want to have a conversation with your buyer about non-refundable earnest money. I saw a few of them come through, Candace, this weekend. It's like we had about 6 months where we're not seeing non-refundable earnest money, but that is a tool if your buyer is wanting to essentially make their earnest money non-refundable, apply it towards the purchase price. I don't want you creating your own language on something like that. There is a specific form that we utilize, and it's in the document tab. So you would need to drag and include that when you prepare your offer. The other thing that is very helpful for those of you who are outside of King and Pierce County, we have our own hold harmless for septic. So if you are going to be selling something in Skagit or in Snohomish County, there's all kinds of problems with the pumping requirements and the county requirements, and the 22S is not sufficient. We went over this with our attorney as well, and he's like, I'd like to have them go ahead and include the 22S, and if they are still not feeling comfortable with that process, there is a septic addendum and a separate clause we can use. And this one right here is built for situations where the buyer is wanting to waive their septic inspection and they're holding you, the agent, harmless. This is sometimes helpful. I'm using this in Idaho as well. Septic systems in Idaho don't have the regulation that they do in King and Pierce counties specifically. And so there is a need for additional disclosure and perhaps contingency waivers and hold harmlesses for those types of scenarios. So just come to me with those one-offs. If it's on a septic system and you're not quite sure, I'd rather hear from you before you write the deal than after you write the deal. And then we have problems with your septic system not perking, dysfunctional, deficient, those types of things that come up. Or then we find out after the fact, right before closing, that we have a problem. The other form that we have here is one of my favorites, and I talk about this in our contract negotiation class. We purposely built this right before we started going into the height of the marketplace. In 2018, we had something like this. 2019, we used it. But this is something you may want to include if you have a client, and I had a client over the weekend, you guys, that called me, and it was a cash buyer, and kind of like wanted to go over the benefits and the risks of using an inspection contingency or not. And she's buying a condo. So it was a cash offer, no finance contingency. and she was contemplating waiving the inspection altogether. So this would be a perfect opportunity if you're having your client ask you a lot of questions. I know Shannon gets this question a lot. Should I waive my inspection? I'd rather not have you email them and say, yes, let's not waive your inspection. Let's waive it so we can get the deal. It would be much better practice to use a form like this, include it in maybe your disclosures, and there is a place to have them initial it, because it goes over and it's in English and it's very clear, non-refundable versus inspections, things you want to clear up. And then there's a place right there that the buyer can initial. Lease backs are described here, the provisions around that. This would be something that you could use also in Idaho. There's no reason why you couldn't use this in Washington or Idaho, because it describes what a high earnest money is, what an offer price when it's greater or less, or there's an escalation provision, or the difference between waiving financing and waiving inspection. So that's why that document is in and embedded, so you can use it as you kind of deem necessary. This procured inspection notice is a way of using a way to acknowledge that the inspection is not, it's used, if say the seller went ahead and had an inspection, and there's a lot of sellers, especially in King County, that are using this type of philosophy. Happened after COVID, where they just go ahead and order an inspection before they go on the market. They upload it as a supplementary document, and in that case, they would use this BCR notice, and that would basically notify the buyer's agents that this is only for disclosure purposes, that we encourage the buyer to determine whether they're okay with this or if they want to hire their own inspector to go out. We are not finding all inspectors made alike. So that's the important reason why you want to use a seller procured inspection report notice to buyer, because you don't want to have the buyer come back and sue you if they are not pleased with the results and they're trying to deal with Form 17 and they have issues with the disclosure statement that's provided by the seller. In essence, that inspection report gets attached to this notice as well as the Form 17. So you definitely want to use that. If you haven't used it in the past, you probably need to dust this off and go to it, download it, because the attorney says we're dealing with a lot of that in King County specifically, but we're starting to see Pierce County and Snohomish County using that form. The cover letter is a very fun cover letter. I have seen, in many instances, actually, our brokerage has won out over some other brokerages because we used a cover letter that set us apart. Why choose our offer? The part you have to remember on this one is you have to drag and drop the text over so you can start typing in when you're in transaction desk, but it does give a little bit about our brokerage. And we do have some bullet points, and it does look like we have a lot of support down below with transaction support manager and with my name and phone number direct on there. So I have had other agents say I couldn't get a hold of Debbie, and Debbie, submitted this offer, and because she used a cover letter, she had questions about the offer, I was able to speak openly about the offer because I was listed there as a designated broker. So you're welcome to use that cover letter. If you go to the additional clauses, I want to make that bigger if you could, Shannon, on the screen, so I can go through line by line on this. Many of you have not been trained on the purchase and sale additional clauses. Now, these additional clauses, they're meant to be for a buyer and a seller, and also to kind of discuss, your duties and your relationships, and just provide some more clarity to the way it's done in Washington State specifically. So this would be a disclosure you would use, or an addendum you would use in Washington State. And Idaho, you'd want to talk with me, but you can ultimately probably take some of the clauses out, and we could work with you on the Idaho contract and create an addendum or a counteroffer to utilize some of these, because they have been vetted by both attorneys. One of the things that is most important is the disclosure of who you represent. If you're licensed in the state of Washington, or if you're licensed in the state of Idaho, and you're buying as a personal property, some of you are picking up some good deals. I don't know about you, but I've seen some. Candace and I have seen a few that we were like, dang it, we were a little bit late to the party, where they've been on the market 150 days. and they dropped the price, and they didn't market it right. And it's like, oh my gosh, this is priced almost below assessed, even below assessed value. And we're seeing some of those deals come up. If you want to buy it, or if you have a relationship with, say, a family member, that disclosure is necessary in Washington to disclose that you're a licensed real estate broker in the state of Washington. So you would need to use this additional clauses addendum, or you would need to write it into your contract. It is not in a normal purchase and sale of contract. So it's number 1 and number 2 are purposely here so that you can remember to get that disclosure done. Membership disclosure, if you're operating as a business, that also is a requirement. I don't know if you guys know this, but in the state of Washington, if you don't disclose that disclosure to both parties, you could run the risk that you could have a problem with your license. So it's a licensing provision. Number 4 is the limitation of sellers' representations and warranties. What this is I have a buyer who's going to be buying this $3.2 million home, and they're like, Rochelle, we want to go all in. We're not going to ask the seller to do anything. We want to buy it as it is. In fact, if they want to leave that furniture in that living room, we are good with that. We want the personal property as well, but we're going to do as is, where is, and there is some risk to doing that. And number 4 outlines the buyer's risk of basically buying the home as is. So we probably did a pre-inspection already, or we waived the inspection and they told me to write that into the contract. Number 4 also makes the seller and the buyer, they're both put on notice so that they understand that there's a limitation on the seller's representations and warranties. Number 5 would be buyers have been advised to obtain zoning codes, hazardous substances, mechanical. We've had a few deals where they've been caught up with, I think there was tires on one property that were underneath the soil, and then the buyer came unglued, and we had a lot of problems with that. This number 5, again, is as is. You can see we don't want to just write buyer to buy the house as is. It's spelled out. What does that mean? So again, the buyer has been advised to obtain a building and zoning code, mechanical, well, septic. They've been advised by Candace Frazier or Shannon Hall to go ahead and do that. And so therefore they're electing to waive their right to provide that, and they're not going to sue the brokerage, the firm, or any of its brokers by doing so. So number 5 is the provision that you'd want to use. Number 6 would be if you're going to increase the price. I know Shannon talked with an agent who was, I think, ultimately offering on a shoreline property. I think it was listed at $650. It went all the way up to $800 on a shoreline property. And so if we were using an escalation or paying above the list price, we may also want to check box number 6, just because we don't want to have the buyer's decision to pay over the list price to get us in trouble, that was their choice to go ahead and offer that type of price. Number 7, the information verification period. That's that paragraph W. It's the way that our attorney would like to have you do it, instead of crossing all this stuff off and then not forgetting to initial things of that nature becomes very, very important. By having number 7 checked, essentially they're waiving their right. The additional disclosures here on number 1 and 2 are kind of, they could be a standalone, right? Where you could take this and maybe even put this into your agency contract, or you could have an email that's sent off to a buyer, because REOs are very different. I've spoken to a few of you in the last couple of weeks about some REOs, short sales. I even saw a few short sales that hit the market. So your clients are seeing these on Zillow, they're seeing these on Redfin, they're seeing these types of properties that are coming available, and they don't have the knowledge base to understand what that all means. So by providing the additional clauses, whether it be here, you've got a nice paragraph you can work with. You could copy and paste this paragraph into an email, for example, if your client's asking you questions about REOs or real estate owned properties. It kind of gives them some more education advice. Buyers may opt to make an offer on a bank-owned property. What does that mean? They use their own agreements, which is normally not a state-approved form, which means that we can't advise on that form. It does provide, it's an as-is type of situation. Lenders may require, I think that's important, the buyers to pay for excise tax. So that might not be suitable for this particular buyer. depending on their financial circumstances. So again, number one is a nice concise paragraph that talks about real estate owned properties. Number two, just like the REOs, new construction kind of has their own contract as well. So this could be something where you may include this addendum as a way to properly just disclose to your buyers, and you can have the buyer's initial, that you've had a conversation with about new construction, and that they're going to use their own forms, and they're going to maybe even write the offer for you. Toll Brothers, for examples, you go and talk with them, and then Toll Brothers actually writes the contract. So it makes you feel nervous a bit as a buyer's agent, where you're like, I have the buyer agency agreement with this buyer. I know the buyer's circumstance. I've shown them properties all over. And now they're going to be going into the new construction home site, and I registered them. Definitely make sure you register your buyers at the home sites. Don't think that they're going to honor your buyer agency agreement, because they won't. I certainly have to get involved in those circumstances, and they're never fun if you don't have the signed agreement or a buyer agency agreement. But new construction will have, most of the time, they'll have their own agreement that they will use. They're called new construction forms, which will supersede anything on the MLSs that you guys are working with. And it may limit the buyer's ability to do inspections. Their financing contingency might be different, those types of things. And that's what you want to make them aware of. I think we covered most of the additional clauses. We got the advisories. We covered all of that. Okay, so I think we've got through most of it. There are times, most of the times that I see you guys needing some additional clauses would be for some creative things. And I'm going to give you some of the top ones that I have creatively done with you. Number one, they want to write in about the furnace needing to be serviced or some sort of work repairs. Anytime you want some sort of work to be done or something needs to be written into the contract when it comes to that, most of the time I advise in Washington that we go ahead and include on the 22D. If you open that up real quick, Shannon, 22D, yep. There is a small place, and it's not very big. And the reason why it's not very big is because anytime you are drafting language or you're typing something in, you are practicing law. So you do want to utilize specific information, maybe some verbiage that you get from me or from our attorney to write that in. But let's just say we wanted to have the furnace service. I used to write that into all my contracts. Seller to please hire a licensed, bonded, and insured HVAC specialist to service the furnace, including the heat exchanger, prior to closing, and provide buyer with receipt. And again, I've used this so many times that I can almost do it in my sleep. But that would be an additional clause that you may want to do. Now, the important thing when I had Shan type this was you have to say who's doing what. So seller to please. I always like to ask please. My mom taught me well. And then we also wanted to provide who's going to be doing that work. We don't want to have the seller just go change the air filters, right? Because sometimes sellers would do that. You just said seller to please service the furnace. I've seen some people ask just like, okay, so if there's so much, if it's so vague, you're going to get what you ask for. So you have to be very specific about who's going to do the work, when does it need to be done, how is it going to be done. In this case, I want the furnace serviced, including the heat exchanger. They might just do the basic service and they're not checking the heat exchanger, which the heat exchanger is the most important part of the furnace. And then provide the buyer with receipt. So again, where's the proof? How are we going to go about completing that work order or that repair? So you want to think about that. This is also best tips when I teach the inspection class. I teach you guys how to write that kind of verbiage because you do a lot of negotiation. In essence, you're almost like practicing law. You're borderline practicing law. And we want to make sure you have the right verbiage to include. So if at any point in time you have questions, you can always text me. Rochelle, here's what I'm thinking. Or I've got the 35R, or I've got this written in the contract. What do you think? I've had people take pictures, stamp a picture of what you're going to write here. And I'll say, oh gosh, no. Or let's talk and get on the same page and make sure we get this written. So that would be an example of one that I've used for work orders. Other ones that we have to do a lot of creative thinking on would be when we have to ask for an extension. Maybe we have an issue where everybody signed their papers, but we actually have not closed, recorded, and funded because they delayed in one of the county. Now, this would not be Idaho. Idaho is very fast, I will say, on their recording. I walked into their office and they recorded right there on the spot. And in Washington, they're backed up. So they can often get, so there you have two different modification of your closing date. You have a 22Y for closing. This has been in Washington, or you have a 22Y or you have a 22Y dash closing. The 22Y dash closing is the one you would use in case you sign papers and just things didn't get recorded properly. If you're just going to extend the closing date out, this is perfectly fine. And you would just want to add a specific date. And then you would want to utilize other dates. That would be if you needed to extend a financing contingency, if you needed to extend an inspection contingency or a feasibility. Those would be the types of dates you'd want to use. And you'd want to probably talk to me because we have to reference where in the contract that's coming from and what is being extended. And we don't want to kind of say, to be extended 5 days or 10 days. We want to actually extend with actual physical dates, just to make sure that the parties are all in agreement. Number 3, we do a lot of extension negotiation when we have to negotiate principal, interest, tax, and insurance, late fees. It depends on who we represent. If we represent the seller, we may have some, we've extended once. Maybe we've extended twice. Candace, I know, Candace, you might be able to share a little bit of light on this, but they're ugly. And it's like you need to be able to have the right language to put in here. Otherwise, the parties are very confused and everybody gets unglued. And it's at the end and it does not look right. Do you want to unmute your line, Shannon or Candace, and just talk about the 22Y?
Just being specific on dates. Well, and two, we see a lot of times the on or before. I think too, it's just a good thing to, even if it's on or before and it happens before, to go ahead and plug in and get that actual date that you wind up closing on.
Yeah.
It does not hurt. So you could even take that and modify it to say the exact date of closing.
What you don't want to have happen is you don't want that. So if February 10th and it comes in 9, let's say our closing date was today on the Monday, right? We know we're not going to hit, the parties didn't sign. We had lender delays. It wasn't with Deanne, I will assure you. It's probably from somebody else. And they just didn't get it done. The docs weren't at escrow. And so we're basically scrambling to get a negotiated extension. The sooner you know that you're going to need extension would be like to do what Candace is talking about. Let's go ahead and just pop a date on there that would give your lender more time to get the docs to escrow and work through what they're working through. And let's communicate that to the listing agent as soon as we know that there's a problem or we need to extend. You're going to have less challenge if you stay in communication with the listing agent than if you were to just wait till the last hour, like, gosh, I'm going to be lucky if I can get the seller. I may need to pay a late fee. At this point, we're like 9 o'clock. I might have to call the other agent. We're going to go February 10th and go, gosh, I needed 2 weeks because we didn't get the paycheck stubs. Right. And I may have to waive my financing contingency, or I may have to extend my finance contingency. So in that type of case, maybe I need to pay the sellers a late fee or make my earnest money non-refundable. Anytime you have to do these types of strategies or tactics, let me help you in making sure the language is written appropriately, because that's where you run some problems if you're writing things and the parties are not, in agreement with what you're trying to do.
I think the other thing to add too is, and one that may be coming up, is possession. So if you are extending the closing date, do think about that possession date a lot. Sometimes it's possession 2 days post closing or what have you. Yeah. Kind of tighten that up and be certain on the possession date as well if you are doing a deferred possession.
Perfect. Great point. That was on my list too. I have it written right here in my notebook. Candace, for the possession date also needs to be addressed. Anytime you're doing closing date, always look at your possession as well. Earnest money, if the earnest money non-refundable is greater than 5% in Washington state, that becomes a little bit of a problem. So kind of keep that in mind as well. If we're talking about $150,000 earnest money check and it's over 5% of the purchase price, that could be an issue. We need to talk with you about how to write that up appropriately. Also, wire fraud is completely on the rise. I spent some time with designated brokers across the state, Western Washington, in the last week. You should not be sending unencrypted settlement statements to your clients. So if, let's say, Candace and I had a deal tonight and it's just, we got the prelim, right? We got the commitment of the settlement. I shouldn't be sending it to Candace and as an attachment unless it's encrypted, because there's a chance that somebody could get their hands on that. So be very careful that you're not just forwarding stuff from your email that's sensitive settlement information like that. It should be coming from escrow in an encrypted type of way. We also are having problems with, like, we're doing a good job on getting the word out about wire fraud and setting the disclosure about that when we represent the buyer and also when we represent the seller. But here's what people have been getting stung with. What about the mom that's gifting the money? She's not aware of wire fraud. And so I talked to 2 designated brokers that in the last 6 months, they had 2 where mom didn't get the money. Mom sent the money to some foreign bank and it was not even tied to the transaction. So they're still trying to work through that legally. So be very careful if you're working with, say, mom's going to contribute $20,000 towards the gift, or maybe mom's going to wire the earnest money check. It's okay, but we need to make sure that mom is also aware of the same thing as our clients are about that wire fraud needs to be, make the phone call it in, don't just wire it through email. Annie Fitzsimmons in the state of Washington did an excellent video. I will also include that with the recordings, talking about post-closing rental agreements. That is a very serious matter. And I think that will also give some more clarity, I think, with some of the things that we're dealing with on Eastern Washington and into Idaho. Their number one issue when I took their contract class in Idaho was those post-closing agreements. And so you may want to watch that, even if you're in Idaho, you may want to watch that Annie Fitzsimmons video just to understand the complexity of those types of deals. There are options. There are really just 3 options when you have a situation. You can extend the closing. You can definitely do a holdback. When I say hold back basically funds, close, and then hold back money. You need holdback language. You cannot be drafting your own holdback language either. So you'll need to talk with me if you're going to need that type of thing done. Or you basically close and let somebody possess the property. And those are the types of situations in Washington and in Idaho that used to be a lot of problem because of tenancy situation, but there's still a lot of uncertainty in that type of law. And we don't do property management. So your buyer or your seller is put into a very risky situation if you opt to go with the 3rd option. I think we're good on that. Form 17. Form 17 if you're representing the seller in a Form 17 in Washington, please go through that Form 17 line item by line item to make sure your seller has filled in everything, just top to bottom. If it's not applicable, check the box, make sure everything is filled in. There has been a few buyers who have attorneys that represent them, and they will go and they will use the Form 17 that's not been filled out correctly. They will use that as a way to negotiate getting it out of the deal or to negotiate a different price. And that is something that's been happening over the last 3 months. So don't run the risk for your seller that you're going to lose your deal or you're going to have to renegotiate your contract because you didn't just take an extra 5 minutes and make sure it's completely filled out. You don't fill it out for them, that's a no-no, but you do need to make sure, and if there's something like Section 7 that's not filled out or the checkbox is not done right, send it back to your seller and please have them complete it so that we have a nice completed Form 17 that cannot be disputed by an attorney representing a buyer. So that issue is coming up quite a bit, and it's usually a higher price point. So those are very, very ugly ones to get involved in. I think that was it, Shannon. Candace, was there anything else that we need to cover on the optional clauses or some situations, or you want to open it up for a few questions?
I think I did notice a question was in the chat. Is there any mention of is there any mention of your disclosures of geological inspections and wetlands inspections that the buyer should consider?
That is all comes into the Form 35 or the feasibility, Lynette. So is there any mention of those disclosure geological? It's all dealt with that. And if somebody is going to waive those, it's talked about in our waiver in that section on the VCR disclosures and on the forms that we talked about there. It is mentioned in the as is section. The other thing somebody just texted me about is how do I win? How do I win on these? I'm sure you guys are out there and you're probably seeing some certain price points getting multiple offers. I know that on one of the listings from this weekend that we had it listed, it was on the market for 100 days. We took the listing over from another company who did a really bad job on how they set everything up. And we had multiple offers that came in over the weekend. And I can tell you right now, many of you need to probably work through some different scenarios of knowing how to cut your timelines down. It really, I was looking at it came down to 2 VA offers, actually, Candace, on one of the listings. And both VA offers were exactly alike. And the one was like, we can't go up any higher in this price. But they would have won if they would have just cut their terms down, if they would have known how to counter, themselves or rewrite their contract. 22A turning from something from 2A to 2B and cutting that financing timeline down. It's a great strategy. Also, cutting your inspection down. Don't ask for 10 days. I mean, if you know you're in a multiple offer situation, cut that down. I mean, we're seeing the one that won, you guys, was a 2-day inspection. And that was great because we just let them have the time to review the Form 17 over a few days, and then they have the 2-day inspection period. So essentially we have a backup in place, and we went with their offer, but they did cut their inspection timeline down and their finance. Increase your earnest money amount. That will also help, and consider possession. I thought that if everything was made alike, let's say they cut the timelines down, the inspection, the finance, and they had everything made alike, the price was the same, then what would make the difference for this seller was literally the closing date. One was closing 2 weeks earlier than the other one, which for a seller, that means that they're going to get their money sooner, and they're going to be able to reinvest it in something else or buy something else. And so they have to pay less in interest, and it's done a lot sooner. So for them, that was the only thing that made the difference was just the 2-week moving their closing date up. So you got to work with a good lender that can move things around and get you real timelines. Any other questions?
Form 35R, the buyer asked them for some repairs and the sellers agreed to credit the buyer towards their closing costs. Could we add them directly in that form? So question being, can you add the credit on the 35R itself?
Good question. I'm glad that came up today.
Good one. Yeah.
Because it's been a while since we negotiated repairs
Right.
on 35R. And when we're talking about money, that becomes a problem, because if you've already negotiated something on the 22A, right, for closing costs, and then you go ahead and ask for it on the 35R, is that an addition? Is that just another portion? Do we have to let the lender know? A lot of questions surround, and again, we can't do lender fraud. So we do need to make sure that we are negotiating that 35R properly. So yes, you can, if the buyers, let's say, for example, Yuru, I think is the question, they asked for some repairs, the seller agreed to credit the buyers on the second section of the 35R. Maybe they're going to credit $5,000 instead of doing the repairs. If the buyers agree with that, then that $5,000 is in addition to whatever was agreed upon in the 22A. So a lender most likely would want to see an addendum created just to clarify the total amount of allowable closing costs that can be used towards the sale. So let's say we ask for $5,000 in our 22A, and then we negotiate on the 35R for another $5,000. we would then probably do an addendum saying that the total seller paid closing costs would be a total of $10,000. So yes, we can do it that way.
I like that verbiage as well. Tristan mentioned he does the line 44 on 22A to be amended to the new closing cost amount. And
Oh, that's great,
that
Tristan.
total. That's
And that's why he's a managing broker. Good job. You do learn some of these things in managing broker. And when you see a lot of poorly written verbiage, and then you handle a lot of deals like I have, where agents had messed up and they're not clear with how they reference the contract or those changes that are being made, that's when you see problems. So definitely great advice, Tristan, on that. Line 44. Reference the line number that you're changing, reference what is being amended. That would be the appropriate way to write those additional clauses. Great job. Buyer agency agreements definitely are on the rise. So don't discount the fact that your competitors are using buyer agency agreements, because their designated brokers and their managing brokers are teaching buyer agency, and they are being disputed. So I would make sure, if I was working with a buyer, if at the minimum, you guys put the buyer agency agreement into your first offer so that you got that buyer committed to working with you for the duration of a timeline. Say the one I wrote up with an agent here today, we did a 6-month term. And so if they didn't get this offer that they wrote up today, then at least they're committed and they've got a relationship formed with that buyer that cannot be disputed by another company. So don't discount the fact that we need to start using buyer agency agreements more, and we're going to ask for it. But that's just, again, at a minimum, get your buyer agency agreement signed at the time of offer. It is not a requirement yet, but it definitely protects all the time and work that you guys put into your buyer clients. Okay. Anything else, Candace, on your side?
I just want to say, continue doing what you're doing with our listings. Our listings are looking absolutely amazing and flawless. Supplements are all included. It's just a good look. It prevents on the other side those buyers having to struggle, gather information. And, when you're writing up an offer, there's no legal and you've got to wait for all of those things to come back. So thank you and kudos to Best Choice Realty for having our listings look amazing and having all the supplements there ready to go for your buyers.
Awesome. Well, that's a wrap for tonight. Thanks again for jumping on. Hopefully this was helpful. You learned maybe a couple things. I know I can't teach all the old dogs new tricks, but it was fun to kind of go through the forms quickly with you on the supplements that you have available. We'll catch up next Monday. If you have any questions, though, it is a busy time. Have a great week, you guys.